What's going on, everybody? Welcome back to another live options class. Today is July the 3rd. It's my mom's birthday, Wednesday. All right. It's about 9:48 in the morning. I'm sick, so I'm gonna do my best. Hopefully, y'all can hear me. Let me know in the chat if y'all hear the voice pretty good. Now, I was asking the question, in the chat. It's post inside the chat group. What do you struggle with the most? Right? What do you struggle with the most? It can, it can be a rule question. That's fine, but just also it can be a psychological, right? Impulse, FOMO. Appreciate that, Andy. Whatever. I'm looking for ideas on videos. So, I had a huge discussion yesterday going over this, and I did record the class yesterday. So I'm not going to really spend too much time on this right here. A key focus, goal, important. If you have any questions, though, obviously, put it down. Jeff has a really good question on spread swing trading, which is going to be a good discussion. But, number one, let's go up here. Bye. See you later. All right. So let's start with this. We're asking in the futures room, what are y'all struggling with the most? One of them was, patience, impulse, FOMO. So the first thing that I would encourage you to do is, well, I don't want to say the first thing, but you definitely want to do what I'm about to say if you haven't already done so yet, is what is your daily routine? What is your daily routine? Now, is your daily routine the same as mine? I mean, that's cool. All I can do is teach you my rules and then answer questions based on, just my 17 years in the market. But what is your daily routine? Is it different than mine? Is it the same? Because that's the secret to your success right there. This daily routine. Now, number one is your posture analysis. Is everybody good on why you do the posture analysis? And do you have any questions on how to do the posture analysis? Right? Mainly, yes, do you have any questions on how to do it, but do you understand why we do it? Because if you don't understand why we do it, you're probably not going to do it. Remember, there's three trends or posture, right? 3. Long-term, intermediate, short-term. Do you understand why we do that? Right. And then how? Because you got to do that. That's the first thing you do before anything else. Okay. Now, and again, I'm going to be answering what you said too about knowing when to exit, and then Jeff, your question. But let's get in here and do our posture analysis. So you go to the SPX and you go to the week. You look at the green line. If it's above 50, it's bullish. That's it. Bias up, bullish, however you want to say it. Long-term posture, up. Go to the day. Green line, intermediate posture. Intermediate posture, up. Which means I want you to go back in time and look at something. When did this green line cross the 50? Do you see that? That's when the green line shifted from intermediate bias down to intermediate bias up. Okay, on 5-7. There you go. Now, this whole time, it's been bias up. I want you to look at this chart. Since May the 7th. How? Okay, May the 3rd. But actually, I think it is May the 7th. That's when it looks like it actually crossed. But either way, you see it, that area. So here's my question to you. Have you been making money? And if not, how the heck have you not been making money? Answer that question realistically. How in the world, when that has basically went up, like up, how could you not make money? If you're losing, tell me, how are you losing? Look at that. Look at that. Did you lose money during that time? If so, what were you doing? The market went straight up for months and months. You gotta ask yourself, man, what the heck were you doing? How did you lose? It's almost impossible, right? That's why we do our posture, by the way. You have no business going short when that's happening. And if you follow our plan and you hit every time it's at support, that's why we made so much money. That's why this year we're up 94.3%. How can we not be up 94.3%? And then it switched to bearish for only a tiny bit. Then it went right back. That's why we do posture analysis. So my whole point of that discussion was, I was asking you, why do we do posture analysis? And does this look familiar? Here we go again. Maybe. How are you losing money, man? Shit. All right. I just wanted to get that across. If you're losing, you got to change something because I don't get it. Just follow what we say, dude. All right. Hopefully you look at that trend and you're like, damn, how did I lose money? All right. Short-term posture. This one's the hardest one to calculate. It's still not hard, but it's the hardest one to calculate. Highs and lows. Based on the blue line, very mechanical. That was a big wave to ride. And we rode it. That's why we're up so damn much this year. And as long as this some bitch keeps going up, we're still going to be up a lot. And then on reverses, we're going to switch. No problem. So, there. Sideways to neutral, period. Right now, I'm sideways to neutral. So my short-term posture is that. Are we good with that? Should be. Okay. Next is your game plan. Don't ever go into any freaking day not knowing what you're going to do. Don't ever go into any day where you're just randomly searching for bullish and bearish trades all day long and you don't even know what the heck you're doing. Have a game plan. Your game plan consists of two components. What setup do you trade? What strategy? The setup is based on the information on the SPX, which we're going to do right now. The strategy is based on the time frames, right? All right, let's go. So here's the game plan. I'm going to go right here to game plan. And let's see what our game plan is today. The near-term blue line is angled up. And it's above 80. Right? Above 80. So somebody tell me, are we closer to resistance or support? resistance, right? What does that mean? So today, if you were going to trade, what strategy would you be focusing on? If you wanted the high probability, again, you're going to focus on bullish, but if you wanted a high probability, it's breakouts. Why breakouts? Because you're closer to resistance. The market is about to break out. If the market breaks out, guess what? 60 to 70% of the stocks are going to break out. So did you take bounce trades today? If you do, they're lower probability. One of the reasons you are losing is because you're taking bounce trades when the market's at resistance. All right, the near-term blue line is angled up. It's above 80. We're closer to resistance. We're taking bullish breakout setups. Breakout. If you take any bearish trades, you're suicide watch. Okay? If you take any bullish trades, the higher probability is your breakout trading plan. Okay? So I think that has that. Let me just make sure I got it. Bullish breakout. Existing trades. Bullish breakout. All right. So today you have permission for bullish breakout setups. If you take any bullish bounce setups, recognize their lower probability. Lower probability. Why would you take that? Again, out of what? Boredom? We talk about that all, we talked about that a lot today. Patience. That inability to wait. You guys, again, some of y'all started taking low probability flags, right? How long did it take you really quickly before you were like, I ain't gonna do that no more? Let me know in chat. Be honest. How many started taking all these low probability trades, and next thing you know, like less than a week, you're like, I ain't doing that no more. Oh, shit. I'm not saying they're bad. They're just low probability, right? It is what it is. You do have permission for bullish breakouts. If you take any bullish bounce setups, recognize they're lower probability. So what I'm going to do is I'm going to cut that. Again, are we good on that so far? This is the whole essence of your trading. I'm telling you right now. This right here. Again, go back to what we just showed you. How could you be losing money? Like, what? Like, I don't get it. Stop making this hard. It's really not. Now, you got to learn the rules, whatever strategy you're going to focus on. Yes, you got to learn the rules. Like Jeff has a legit question based on spreads, which we'll talk about. Okay. I'll look at MGM. Yeah, these are good. All right. All right. So let's go to our Q&A group. The Q&A group. Oh, today's the 3rd. This is what I post every day in the Q&A group. I post this. That right there is worth 50 million times more than what people pay for that course. 50 million times more. They just don't even know how valuable that is. Options Elite Room. Now, also with the Options Elite Room, I'm going to post this. What setup do you have permission to trade today? Bullish, breakout, setups. What strategy? What strategy do you have permission to trade today? Calls or spreads? Spreads. Simple. Because your intermediate posture is counter your short-term posture. That means it's could be a bumpy ride. So you're better off just to trade spreads. And then you got a good question from Jeff on spreads, right? We'll get into that as well, because that's a whole different discussion. Now, let me go to the nuance, because I only post this in the options room also. Right here. All right. And then I'm going to type this. If you have any questions, please post them here in the group so we all can benefit. Thank you. All right, we're going to go look at some stuff. Let's start off by going to look at CCL. Now, actually, before we do that, I'm going to go look at the SPX again. We're closer to resistance. So guess what? Those at the gates. Remember, I built that watch list of at the gates. They're bull flags and bear flags. Correlated stocks. I'm going to go through those really quick. I'm going to see if the setup is still valid. It doesn't mean we have permission to trade it. I just want to see if the setup is still valid. We don't have permission to take flag trades today unless they're non-correlated. But I still want to leave them in my watch list because the market could reverse and that blue line could be back below 50. So let's go through our at the gates. And the first one happens to be CCL. Look at that. Number one on CCL. That near, okay. First question is, let me ask you guys this question. Did we have an intermediate confirmation signal yesterday in CCL? And Andy says yes. Everybody agree? We had an intermediate confirmation signal yesterday. Okay, I'm gonna agree with you, Andy. We did. So based on the information right now, is the intermediate confirmation signal giving you a confirmed entry? No, sir. So, two things. One, should I leave it on my watch list? Yes, because it's still a flag. Two, this is a low probability flag because the market's at resistance. But even though, do I have an entry right now to get in? No. No. Now, if they go below 5, like Jason was saying, that would give you an aggressive entry. But remember, we talked about this. When you have a lower probability flag, maybe you back off on those aggressive entries. Be a little bit smarter. Wait for that blue line to tick up after it. So the answer is CCL, bull flag, intermediate confirmation, low probability flag. Period. Now, Andy said MGM will suck you in. Just say no. Well, let's go look at MGM. Let's see if it sucks us in. MGM. Well, by God. Look at you, MGM. Oh, that's on our flag watch list. So my question is it a valid flag? Yes. Did we have an intermediate confirmation signal yesterday? Yes. Is that intermediate confirmation signal confirming today? Also a yes. Recognize, though, if you get in this trade, it's lower probability because the market's at resistance. That doesn't mean it won't work. It's just lower probability. So if you take low probability flags when the market's at resistance, there you go. You have an entry right now. So Jeff has a question. He said, the one thing I struggle with is spreads and swing trading. I struggle with choosing the right expiration date, strike price, and debit I should pay. Yesterday was a good example on XLC, an updated video. So here we go. This is recording right now. XLC, we talked about that yesterday. But let's go look at MGM. We're on MGM right now in our live class. Our live class. This is giving you a bull flag intermediate conservative entry right now. But we know it's low probability, so you recognize that. But let's just say you were going to take this trade. you would go to MGM. So Jeff said he struggles with one, their expiration date. So write this down, 20 to 50 days. That's your first line of attack on spreads. We already know today, based on our game plan discussion earlier, you have permission to take spreads today. You can take this trade right now. It's just lower probability. So if you're like me and you only take high probabilities, you avoid impulse, you pass. But that's the first thing, expiration, right? 20 to 50 days. Now, I'm going to be honest. Whenever I do spreads, I would love to get closer to the 20. When I buy call options, I want to be closer to the 50. That's the first thing. So I also prefer the monthly option chain, not the weekly. Why? Usually there's better volume. The spreads are tighter. So if I was looking at MGM right now, I would look at this first monthly and I would say, I cannot do that because it's below 20. You don't break the rules. That is what it is. So then I would gravitate towards the 44 first because I go to the monthlies first. That's just the way I do it. So then the next question is strike price. If you're going to do a debit vertical spread, the way I do it is that first strike out of the money, 44. Very tight spreads. So you right click, buy vertical. As you say you're struggling with the right expiration date, we just solved that problem. Strike price, sell first strike out of the money. So the minus, that's the sell. We're looking for that first strike out of the money, which is 44. So we sell the 44. With a call debit spread, you sell the 44, you got to buy a strike lower. So I like to start off with $2 wides. So I'm going to look to buy the 42. Okay. Now, what do you pay? What do you pay? Here's a good rule of thumb that you can look and write this down. First of all, there's no right or wrong answer. But here's a good rule of thumb. Number one, on a $2 wide, what is the most that you're going to pay? We're in a live coaching, so let's get participation in this live $1. Wasted no time. Okay, there is no negotiation on that. Thanks, Jeff. If it's a $2 wide, you are only willing to pay $1. So the first thing that you're going to do is go down to $1. You will not pay more than that. You position size on losing everything. Doesn't mean you will lose everything, but that's what you position size. So as far as what you pay, well, that gives you the maximums. Now, here's a good rule of thumb. I want you to look down here at the mid and the natural. And I'm sick right now, guys, so I'm doing this class while I'm sick. If these two are within 10 cents, 10 cents. So this would have to be, up to 121 is still 10 cents. If it's within 10 cents, just put it at your $1. Let it sit there. And if you get filled, you get filled. If you don't, you don't. Now, another thing you can do is if this is greater than 10 cents. Okay, so the question was yesterday on XLC. Let's go look at XLC. Now, I'm not going to look at the chart. We're straight looking at the vertical. XLC. So knowing the guidelines on XLC, tell me really quickly in the chat, what would be the strike, the expiration date, that cycle that I will look at? Okay, what would be the option chain, right? The expiration date. The 16 August. So are we good on that? Why? Because it's 20 to 50 days. I prefer 20. That's below 20. I go here. Bam. Now, this is where, you got to do a little thing. Look at the strikes. This is really wide. That's not wide. That's fine. So let's do this. First strike out of the money, right click, buy vertical. So you sell the 87 and you buy the 85. What's the most you're willing to pay? $1. Now, look at the spreads. Are they more than 10 cents? Yeah. They're like 30 cents. I'm just going to round and say 30. There's no right or wrong. I'm just going to round. About 30 cents, maybe 25, but I'm just going to go with 30 because a minute ago it was 30. So you can divide that by 2. 15. So then you subtract 15 cents from the most you're willing to pay. That would put it at 85 cents. Now you could say, oh, well, it's 20. Well, it's fine. Then do 10 cents. Put it at 90. All right? And let it sit there. Right? Andy says, aha. Jeff said, got it. So your question on doing an updated video, we're doing this live right now. So you struggle with spreads. You should not struggle with the expiration. Oh, here's the next question. So if the 44 days, let's say it was a $5 wide. I don't like to do $5 wides. Then I'm going to probably go and look at the 30 days. That's just usually what I do. 20 to 50 days. If this option chain would have been $5 wide, I would have backed off. And then I just like to start at the 30. You could start at the 23, but I just like to start after that 30. So then I would go to the 30. I would look at these strikes. And again, look at that. I would probably not even bother. Or you could do the same thing that we just did. You could say, right click, buy vertical, sell the 86.5, buy the 84.5. That's a good one. Buy the 84.5. So then you tell yourself, okay, it's a debit of $1. I can do it. It's 90 cents. Look at the spread. That's like $1. Let's say $1.10. That's 50 cents. You'd have to put this at like 40 cents. Just pass. So then what I would probably do is I would probably go look at the 23 days. Hey, guess what? Well, that one's bad. Right click, buy vertical, sell the 86.5, buy the 84.5. $1, I put it at $1, and then I would see that that's basically 60 cents. So I'd probably put it at 70 cents and let it sit there. That's it. Or just pass. There's no right or wrong answer on that. I'm giving you a guideline that you can do. And exactly how my brain, because guys, when you have permission for just spreads, you've got to know this. You're welcome. You're welcome. That's exactly what's going on in my brain when I'm picking the expiration month. I'm going for the strike price, first strike out of the money. Make sure your guidelines are there, right? $2 wide, $2.50. We talk about. Whenever I do whenever I do a strike, let's say the strike was 100 and then it was 98, that's 2. Sometimes if that's too wide, I'll look at the 99 and make it 1. And then I do the same thing. I start at 50 cents and I work backwards depending on the spread. If it's within 10 cents, just put it at 50 cents and go to work. All right. So anyway, hopefully that discussion and updated video on, spreads, choosing the expiration date, strike price, and all that helps out. Nope. What setup is Google now? It's a breakout setup. So guess what? If you have permission to take breakout trades, there's a breakout setup right there. That's how you do it. And I'm going to go over here to my at the gates, and I'm going to delete it. XLC. I was all over that one. I wanted that one. The spreads were bad. I can't control it. Now I take it off my at the gates. MGM, that would be an entry today into a low probability flag. FXI. All right. This is a beautiful discussion. I had it on my list for bear flag. So you tell me, should I leave it on my at the gates for a bear flag setup? And you said yes. Okay, what do you think? Y'all think I should leave this on my list for a bear flag setup? And he now switches it to no. Anybody else got any thoughts and suggestions? Should I leave this on my bear flag at the gates? We need that little Jeopardy song. Too deep now. There you go. Check this out. Guys, here's the rule. On bear flags, you've got these three moving averages. Whenever it is above, in this case, it's way above, the highest one, this is no longer a clean bear flag. You don't hesitate. You don't FOMO. You don't think about it. You basically take that and you delete it and you move on. In this case, it's the 34, but sometimes it might be the other one. So it's just, because it depends on where it's at. But like in this case, look, it just has to, if it's above the last one, whatever the highest one is. In this case, it happens to be the 34. But if the blue was above it, it would be the blue. So at the end of the day, there's not a set thing of it's got to be above the 30. It can't be above the 34. It just can't be above the highest one, whatever that one is. In this case, it just happens to be the 34. Does that make sense? Sometimes it's not. Sometimes that would be the 8. It doesn't matter. It's the last one. Got to be under the last, that's the best I can describe it. Does that make sense? Can't write it down as a hard, fast rule that it can't be above the 34. You got to write it down as it can't be above whatever the highest moving average is at that time. That makes sense. All right? Perfect. So I am going to take this off my list. I already did. Let's go to Meta. So am I going to leave Meta on my bull flag list? The answer is no. Why? Because the blue line is above the 50. RCL. Am I going to leave it on my bull flag watch list? Yes or no? Yeah, because it's still a valid flag. All right, let's leave it. EWY, Korean ETF. Well, guess what? This has got a breakout setup now. It's not a flag. It didn't pull back and then bounce, so it's definitely off my flag list. But now this is a breakout setup. So let me see if I've already posted this as a breakout setup. Yeah, I did. This is a breakout setup. It's off my list. So on my at the gates, I got CCL, MGM, until it crosses the 50, RCL. That's it. So far, of which the only one I'm willing to trade right now is none of them. Because I don't do low probability. I saw that chart where the market was going straight up. I understand that if you want to make money and you want at the end of the year, look at this chart and tell yourself, how did I not make money when the market went straight up? Okay? It's because you're taking a bunch of trades right before the market's about to reverse, dude. Fuck that. Simple. 94.3%. How? Because the market has went straight up. How can you not be? How can you not be? Come on. All right. Not going to take anything so far. We never used to talk about this. For those of you that were in the old No way, we focus more on strategy, right? Jason, you were here for the old stuff. What makes more sense to you, focusing on the methodology that we're talking about now or the methodology we talked about back then? Of course, right? Now. Nobody talks about this. Yeah, thanks, Andy. Nobody talks about this. Everybody talks about the strategy, right? Or the setup. Oh, what the squeeze. And then they wonder why they lose. Exactly. That linear regression bullshit. I want to win. I don't lose. All right. So the next thing is, let's just go through our, again, I'm going to go fast. I'm going to go fast. But I've got the stickers which allow it to go fast and the scans. So this is my major ETFs to trade regardless of the market permission, which means you have to look at the higher time frame bias and the daily permission first. They've all got to be in sync. If you have the permission codes and it's gray, the gray will only pop up for the week and the month. That's neutral. That means you can still go either direction based on what the day does. The day will never go gray. It will only be green or red. So like if you look at XOP, you've got gray, red. What is your bias on XOP? What is your bias on XOP? EEM is bias up, right? Gray, either direction. Green, bias up. What's the setup? It's breaking out right now. We posted this yesterday as a breakout setup. Today it's breaking out right now. So that's it. It's breaking out right now. And it's a black squeeze, right? A black squeeze up trending EEM. So I'm going to write that down. Now, I'm not trading breakouts, but it's still a breakout setup. It's actually breaking out right now. EWY, bias up. What's the setup? Breakout. Breakout setup. Write it down. EWZ, bias down. Now, this one's even stronger, right? Because it's red. So that's bias down all the way. Sellers are in total control. What's the setup? No setup. Not a bearish breakout, not a bear flag, not a squeeze, no setup, period. FCX, no bias. FXI, bias down. What's the setup? Black squeeze. Black, downtrending, squeeze, FXI. All right. GDX, no bias. IYR, what's your bias on IYR? What's your bias on IYR? It's bias up. All right. So guess what? We're trading to the upside. What's the setup? Orange squeeze. Orange uptrending squeeze. There you go. That's your setup. Silver, no bias. SMH, bias up. That's really good. You got green. You definitely like that one. What's the setup? No setup. Okay, right now there's no setup, but as it approaches higher, there'll be a breakout setup. But right now, no setup. Bias down. What's the setup? That is a bear flag. TLT bear flag. Now, Jason, remember we just talked about, look, in this situation, which one's the highest? The red one. So it doesn't matter which one, it just has to be below whatever the highest one is. You see that now in real time. The highest one is red. So I can't write down on my notes it's got to be below the 34 because it can't be. It has to be below the highest one. And in this case, the highest one right now is the red one. So it's a bear flag until it stays under that. If it goes above that, it's off. So guess what I'm going to do? I'm going to write that down. TLT bias down, bear flag. that make sense? And I'm going to put that in my at the gates because I like flags. TLT, there you go. All right, USO, bias up. Well, guess what? It's starting to pull back into a flag. So USO is a bull flag. Bias up, bull flag, setup. USO, bias up, bull flag, setup. I'm going to put it in my at the gate. I mean, we'll trade it right now because I don't have an entry signal. UUP, what's the setup? We talked about this yesterday. Ugly, ugly, ugly. Here's a high. Here's a low. Here's going to be a low. Here's going to be a high. Like, this is just a complete mess. No setup. No bias. No bias. Bias down. Red squeeze. There you go. So I just went through my major ETFs because right now I can't trade a bull flag on a correlated stock. So that's my only choice. But that's like 20 stocks almost. That's plenty right there to make a living. So the one that I would be willing to trade today, or the ones are TLT, USO. That's it. Just like Andy said yesterday, you see MGM and you're like, oh, this is great, but you back off. It's not your trade. Does that make sense? You do this, you win. How in the world could you lose? Look at the damn market. You have no business losing. If you're down for the year, you got to change something, man. You should not be down. I'm not saying you'll be 94%, but come on, you should be up. Now, you can go through your bias up flags. That's what I'm going to do right now. I'm going to go to scan. I'm going to load my bias up flag scan. Bias up flag. There you go. That's a lot of criteria, right? And it scans through all optionable. It's got a lot of information. Beautiful. So what I'm going to do is I'm going to go here and I'm going to share this scan with y'all in the group right now. There you go. Bam. There is a bias up flag scan. Go here. And I can give that to you because that's not, that's not something that somebody built and they said, no, you got to charge. No. Look, Jason, I still got your old scans. Bias down. Bias down. There you go. There's the bias down. But now I don't have to send it to you, Jason. There it is. Bias up flag, bias down flag. And then you run it. Like, let's go back to our bias up. Let's go scan. Let's see what pops up. Bam, 1. Out of every single stock that exists, only 1 pops up. And that's got everything. Bias, permission, earnings, again, market cap. I don't like to trade. It's stock got to be greater than $30. I mean, you can change some of that criteria if you want. Got to be above this moving out. It's just got the best of the best. So then you just go up here and you would save it, right? There you go. And then it's dynamic. So that's it. There's 1. So then you go look at it. Is it still a valid bull flag? Yeah, it is. But I looked at the options. I think they suck. Well, they don't really suck today. Yeah, I think they still suck. See how wide they are? So I'm not even going to bother, but it's a valid flag. But again, you can change that criteria around. Maybe you want to do stocks that are less than $30. That's up to you. I got my master watch list with the majority of my stocks, so that's why I don't care. I have my bias up. Look at that. Remember, because earnings, right? On this bias up, there's only a couple to go through. So what you do is, you pass on these. So look at these. You've narrowed down your 100 stocks to those, which again, those have bias permission. Earnings is out of the question. I don't think there's a volume criteria because it's already on my master watch list. So you just go to Airbnb. What's the setup? Well, it's a black squeeze. It's starting to pull back into a flag, but right now I would still just classify it as a black squeeze. AMAT, we don't like AMAT. What's the next setup? Breakout. There you go. AMAT, breakout setup. Write that down, right? Because that's what you actually have permission to trade. Bed Bath, Best Buy. This is actually a bear flag setup. But guess what? It's bias up, so who cares? We already looked at CCL, FDX. Ooh, this is starting to pull back into a flag. Write that down. FDX, bull flag. FDX, bias up, bull flag. Oracle, breakout. Bullish breakout, Oracle. Palantir, breakout, right? Bullish breakout. Bias up, breakout. Uber, green to black. But you know what? It's working on its way to a breakout setup. 73.64 plus 20 cents. I'll go ahead and put it down as a breakout setup. Why not? You're not I mean, again, it's not an entry yet anyway. Oil, we already looked at Walmart. Walmart's a squeeze. Am I going to post that in the group today? Somebody tell me. That is an absolute picture-perfect, beautiful squeeze. John Carter would be proud of you for finding that squeeze. One, am I going to post it in our group today? Let's just start with that question first. What do y'all think? You think I'm going to post that in our Options Elite group today? Nope. Because it's a bounce setup. Squeeze is the bounce setup. All right. People wonder why squeezes fail because they're trading them at the wrong time. Today's not the day for squeeze, but guess what? You know, it's working its way up to a breakout. It's got a little ways to go, so I'll pass on that. That's it. That's all my stocks. So I went through my watch list. I did a training video, and you know what to do. So as of right now, let me see. I'm going to put FDX. I'm going to put this newest ones on here. We got USO. We already put that on there. FDX. So if you were going to trade this, this is a low probability flag because of everything that we talked about. But I'm going to put it on my list because I'm not going to trade it. That's it. So we've taken every single stock that exists, including my master watch list of 100. And the only ones that I have permission to trade right now are two, TLT and USO. You see how we did that? That's called zoning it in. Any final questions? If not, happy 4th of July, everybody. I'll post these few in there. You already know what I'm looking at. We have a training. I recorded this class. Any final thoughts, final questions? Hey, thanks, Andy. ELF broke to a new low. Protective put we did on is helping. Well, let's go look at WBA. Yeah, today is probably helping us. We should have done it earlier. We should have done it way up here, fucking in front of earnings. I wasn't even thinking about it. But that's good. That's good. ELF on a shelf. Yeah. All right. ELF. Here we go. So, what is the higher time frame bias? I'm going to go by the stickers. It's up. So I would put higher time frame up. What's the daily? What's the daily permission? Bullish. Okay. So what is my bias? That's the first thing we want to look at. What is the bias on ELF? Up, down, or no bias? What's the bias on ELF? Jason, what's the bias? Up. Okay, cool. So we know which direction we're trading. Up. Okay, good. So let's go for next question. What is the setup? So look at the blue line. There's a high. There's a high. There's a low. And this is going to be a low. So what's the setup? Because that's what matters now. What is the setup? Entry signal doesn't mean squat. What's the setup? Is this a bull flag setup based on our guidelines? The answer is absolutely not. Right? You got a lower low. You could even call it an equal low. And basically almost an equal high. This is not a flag. The entry signal doesn't mean anything without the setup. So you start off with the permission, higher time frame. Then you go, the bias, higher time frame bias, daily permission. Then you put them together, it's bias up. And then you go look at the setup and you say, no setup, that's it, you're done. Oh, but it's got an intermediate confirmation signal. It doesn't mean squat. Entry signal doesn't even matter unless you got a setup, right? So this ELF is a no setup. Move on. That's how you do every stock. Right? Somebody just randomly give me a stock. Just randomly throw out a stock right now. Who cares what you think? Just ran in your head. What's the first stock in your head? Throw it out. Okay, MSI. There you go. Don't even know what that is. Motorola. So the first thing that I would do, all right, Jason, cool. First thing we do is, what is the higher time frame bias? Up. What is the daily permission? Up. So bias up. What's the setup? Well, that's a high. That's a low. That's basically kind of a pennant. Is that a flag? Nope. What's the setup? Well, it's not a squeeze, not a flag. You still got a ways to go for the breakout. So right now, no setup. So there you go. No setup. You go to T. Higher time frame bias. Up. Daily permission up. What is the setup? Bull flag. Bull flag. There you go. So if T's on your list of stocks to trade, you go put that in your at the gates, intermediate confirmation. It's not an entry right now, and it's also low probability. That's it. Beautiful looking flag. ABBV. Higher time frame bias. Neutral, which means either direction. When it's neutral, you always resort to the daily. Since the daily's bullish, this is up. What's the setup? Is it a flag? Well, you got a high here. You got a high here. You got a low here. You got a low here. That's a disaster. But guess what? What is the setup? You got 3 dots. It's in a squeeze. 3 dots or less is a green to black setup. So right there, ABBV, higher time frame bias, neutral, daily permission up, setup, green to black. You don't trade green to black, you don't care. Simple as that. This is how you, and this is it. You already know what you're looking for today, but you still go through your stocks and put them on, put those setups that meet your criteria on your at the gates. It doesn't mean you're going to trade them right now, because the market, it could change at any moment. So you got to be ready just in case. Does that make sense? It's a simple. Simple. All right, let me stop the recording. Glad we had that final discussion. All right, y'all. Y'all have an incredible day. We'll see you inside the group. If y'all need me, just let me know. We will not be here tomorrow, obviously. But Friday, we'll be back in the game, guys. We'll be back in the game. Have a great 4th of July. Be safe. And we'll talk to y'all soon. I'll work on these trainings and get these posted too.